It's Wednesday, October 19th, 2016. This is Ron Feinstein, the Consummate Price Behaviorist at New Wave Forecasting with a little recap of the markets and what I think is going to be coming down the pike. Not very many surprises today, if any, really. Looking at the crude oil market, I talked about last week the reasons that the market was supposed to resolve to the upside and trade above $52, and we just about got there today. So the courtesy consolidation triangle has paid off. This should be a terminal wave. November contract could be somewhere 52.50, 53. I don't really know. Market could conceivably extend, but I think it's somewhat unlikely. We're overbought, but no divergence. So I think a little higher, still more likely than not before the market heads back down towards $50. So again, this forecast 100% so far. Okay, we're going to be moving into the December contract of NatGas probably in the next couple days here. But for now, we're still focusing on the November. And the one thing I have been saying about this particular forecast right along is that this B wave was going to have to fall back below this previous peak back here at 316.5. And guess what? It happened today. And it brought prices right down to an area that had been previous support. And this is where I thought the first opportunity would present. However, I didn't think it was going to happen quite this way. So I don't know. We've got report tomorrow. It's really going to make or break the market. We conceivably could make it below 310 and test the bottom of this channel before heading back up. Or we might just have a little bit less dramatic decline. So what we're looking at now, again, we've made the initial expectation here, completing the minimum requirement for a B wave. I think we will have a little head fake in the morning, probably just before the number. Maybe we'll test 320 and then drop sharply on the news to break out 314 and then ideally turn around and come right back up again. And if we do that and come back up 320.5, you know, we could be on our way to the top of the channel again. Unfortunately, this is a B-wave situation and we won't be able to comment on it until we see the price behavior real time in the morning. All right, throughout this entire whatever we're going to call it in gold, I've talked about how important that 1267 number was, and now I'd say it's just as important, except perhaps on the downside. I don't think this is an upside pattern breakout in gold. I think it is more likely going to turn out to be a bull trap. I say that because silver didn't trade well and platinum is trading like 350 plus under gold, which is also not a bullish event. So momentum doesn't look that great. So I think, you know, it could just merely take a break at 1265 to cause this thing to crash and burn. And if we're going to keep on trudging higher, you know, I know there's a lot of people that are a lot more bullish than me, but I'd say 1279. And, you know, if it gets above there, I'll throw in the towel. But until then, I am not. I still think this is more likely an opportunity, a courtesy rally, than it is a courtesy consolidation to be a buyer. All right, unfortunately, I am the same old song and dance here in the euro, view everything as a courtesy rally. Maybe we get to above 3, get to 110.50 plus in the December contract. Maybe we don't. Hopefully we do. Can only advise caution as it's been impossible to make money being short below 110 so far. So given that I have to call this a danger zone down here, I would continue to only look to position the short side in rallies, and I suppose if I had nothing better to do, I could consider possibly buying the market, but that's not how I would choose to play this. I'd rather sell another rally, looking for continued weakness, although not necessarily dramatic, and that's why you don't want to sell weakness, you want to sell strength. Not very sexy, but the 10-year continues to slowly trudge higher. This is not a typical third wave, but the 10-year doesn't trade like a normal market and hasn't for quite a while. So I'm going to continue to stay bullish here, looking for 130.30 to 131 even. And I guess, as I think I said yesterday, if we fall much below 129.30, I'd reevaluate this, although unlikely to be bearish, more likely just to be nothing, sideways. Staying bullish for now. Okay, the E-mini S&P actually had a pretty good day today after coming down to, you know, conventional support. And I still think 2147 and or 2157, which are the Fibonacci numbers, are the likely targets here. And, you know, This could be quite a courtesy rally. I was thinking about this today. This may be the first really good setup to be a seller here in stocks for quite a while. So we'll be watching that. I think it's unlikely to be tomorrow, but perhaps Friday we could be looking at a move that could be even worth buying puts into conceivably. That's how bearish I might just be come Friday. Okay, part of the reason that I'm getting so potentially bared up on stocks is that the E-mini NASDAQ just did nothing today, and while this is by no means bearish, this is still a bullish pattern. Don't misconstrue. These are higher highs and higher lows, and this decline is clearly a three-wave break. So I still say we're going to 48.75, but I'm starting to think this maybe we turn this B into a triangle over here, slide this C wave over a little bit, still wind up getting above 48.70, 48.75, and then head down hard. So this is what I was talking about a minute ago with the S&Ps, that we could be looking at the first really interesting selling opportunity, courtesy rally in both the E-mini NASDAQ and the E-mini S&P that we have seen in a very long time. If you recall, I did turn officially neutral on the E-mini S&P, I think it was 2 weeks ago, and certainly wasn't a bad decision. I haven't been officially bearish in a while, but it could come. So if at the moment I'm thinking I'm more likely to turn my official Timers Digest stock position bearish than I am bullish from its current position of neutral. So that's it for today. Quick one. Ron Feinstein, October 19th, 2016. New Wave Forecasting real-time update in the morning. Another video tomorrow night.